Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Scout, and jumping into the charts on this October 18th. So as we kick off earnings season, there's a couple of earnings performers. Netflix obviously having a big surge in the after hours. You can see that Netflix had a little bit of a down day today, was at resistance, but was putting a little bit of a bullish bull flag. Clearly, it had a positive break in the after hours. But as you can see, it is approaching key resistance. One thing I want to show you on the daily chart is there you have a downsloping 200 daily moving average. That is going to be an impeccable amount of resistance, along with this upsloping parallel channel connecting your pivot here to your pivot here, and eventually potentially another pivot. Now there's a lot of bullish people out there that are going to try to jump on this train and push this price up to this gap window 330 and then gap fill around 348. I think that's a little bit of a stretch for Netflix to get there, even though they did have good earnings. When you start to see companies like this, obviously Netflix is a part of the FANG stocks. This is something that the Fed does not want. So in a time where we're trying to mitigate and lower inflation, and really we haven't done a good job of that, when you start to see asset classes pushing up, which likely tomorrow is going to be another positive day for the stock market just on the back of Netflix. You have sympathy plays like Disney as well performing. You have ISRG that had a pretty good pop. United Airlines are having a good pop. So when you analyze the price action of the S&P, clearly we're going to get some more upside. Maybe you do get that inevitable retrace back to the neckline of this head and shoulders pattern before rolling over. That's certainly a possibility, but the big question is, can we get through this little resistance here? If we can get through that, then there is a shot at getting to about this, somewhere in the low 400s on the SPY. But overall, the SPY did finish up positive today, another 1.17%. One thing I want to draw to your attention, let me just put the auto on the chart. This daily tail over here actually did not happen. It's another fake print. And let me remind you, we also got a fake print here on October 4th, where on the daily chart it looked like we filled this technical gap. Same thing, it looked like we filled this technical gap, but intraday action, the price action never went there. And we all know, well, some of you might not know, but in terms of fake prints, it's generally a smoke signal across the stock market to institutions. A lot of investors don't look at the intraday action, they just follow the daily price action. So when you have a technical gap fill around this 357 mark and it looks like it's been filled on the daily, but when you flip to the intraday, you still have that massive gap. That leaves the markets very vulnerable. And like I said, traders often notice this, but investors don't, because they're not looking at the intraday action. So when you see a fake print like that, you really have to be cautious, because just like we got this fake print on October 4th where you see this daily tail here, the intraday action, if we go all the way back to October 4th, and just bear with me while I scroll on this. So October 4th is over here. So this was the fake daily print where it showed on the daily candle we had the gap fill complete. And then markets tried staging a rally, sucking in new money, and then we obviously know what happened. Boom, markets fell, and it wasn't until October 7th that you filled that gap completely. You can see you had a little bit of a technical intraday bounce, but then started falling lower. So just be very mindful that the markets are still very susceptible to coming down here to fill this gap. So often with these fake prints, the markets like to suck in new money before taking it lower to that inevitable gap fill. On the daily chart, that is still a big technical daily gap that needs to be filled, and I'm still skeptical about these markets heading higher. But in the event that they do, I have no problem accumulating more shorts. It's kind of going to be a blessing in disguise if these markets do float up. Like I said, we still have this inside bar bearish head and shoulders pattern where, technically speaking, as long as you're trading inside of here and you don't recapture this neckline, that means the pattern still favors likely downside. And I do think that the markets will head lower over time. I still think we're going to get to the pre-COVID high. And then in a deep bad recession, which is certainly to be forecasted, I think we could even go lower than the pre-COVID high. Because of the mean reversion where we swung so far to the upside as we printed money from the COVID crash over here to save us, I feel like we do have to mean revert in a pretty big way to basically wipe out all of this forward PE that we pulled from the future. Let's take a look at the QQQ. The Qs also finished up on the day today, up over 0.79, so they were a little bit of a lagger. The positive for the Qs is that you filled this technical gap on the daily chart, but the negative for the Qs is that you weren't able to close above this trend line. Now, in the after hours, you are above that trend line, so that's certainly a little bit of a bullish factor. But again, looking at the Qs, you still have a massive technical gap fill here at 260.65. So I do think that will be filled at some point in time. Let's take a look at what the dollar did. Obviously, the market's got a little bit of bounce because the dollar was pretty much negative to flat. Now, the interesting thing about the dollar is, let's just take a look at this trend. This blue line here is the 25-day moving average. Every time you've hit it in the last 1, you've bounced. 2, you've bounced. 3, you've bounced. So will we get a fourth bounce off of this 25-day moving average? It is also happens to coincide with this parallel channel of support here. It does show that there could be a little bit more downside to about 111.61, but I am anticipating a potential bounce in the US dollar. Again, as the markets run up, that's when people and investors should start to fear that the Fed is going to get more aggressive. Let's take a look at the US 2-year yield. That's the yield that is going to imply where the Fed needs to get their Fed fund rate to. So at this point in time, the bond market is implying the Federal Reserve needs to get their Fed fund rate to 4.43%. So the rates are still technically bullishly consolidating, which should make investors very nervous. The fact that you're still holding above this breakout high, now you haven't confirmed on a daily basis, but this week it certainly is open to a potential weekly confirmation, which will need a pop above this pivot high to confirm that. But nonetheless, this slow consolidation inside of this green bar is still, it's a little bit premature, but it's looking and shaping up to be potentially bullish consolidation. And one of the reasons why is you're making kind of a little bit of a series of higher lows, but you're making a series of lower closing lows. So this is a tight range of bullish consolidation that is happening on the US 10-year yield. Let's take a look at gold. Gold is showing some pretty weak price action considering the dollar was flat. Gold just finished up 0.16%. Now, it's too early to tell whether or not this is going to be shaping up into be a bear flag. We would probably need at least another week of consolidation before this potentially breaks down lower. Now, gold really for the bulls, if you're bullish on gold, which I technically am, but if it goes lower, we'll accumulate more because we have room to add more to that position. I still like gold down here. It's still showing great relative strength against the dollar, the almighty dollar at this point in time. But nonetheless, you're still trading inside of this massive, massive run up from 2018. This is still technically all inside bullish consolidation. And we'll just have to be patient with gold. I do think if the dollar continues to soften, gold will start to perform. Let's take a look at oil. WTI has once again closed back inside of this yellow channel, this yellow trend line. So that is a very, very negative sign for oil. What that means is the likelihood of us coming down to the 79.33 level is very, very likely. And if we don't get a technical bounce there, then you should fill this gap down here at 75.80. And I would be shocked if you don't get a technical bounce, but there is an announcement from the Biden administration supposed to be tomorrow announcing a plan to lower more gas prices. So whether or not it's anything new, it probably is going to coincide with another SPR release plan. So if they talk a big gain ahead of the midterm elections, we could be hearing them that they're going to be even depleting the SPR, the Strategic Petroleum Reserve, even more, which would certainly put a little bit of a headwind for the price of oil as they make their promises to lower gas price. Natural gas, very, very weak. Natural gas is actually getting very intriguing now. You've had a 3-bar surge to a low. I was actually very close to potentially picking this up for a swing trade. The only reason I didn't is because you are having an increase in volume over here. So if the volume trends were decreasing, I would have expected potentially a pickup. I do like the long-term setup that you've had 1, 2, 3, 4, 5, 6, 7, 8 weeks down in a row. You are at some technical support, but the one thing that concerns me is this whole period of consolidation. So if we get one more flush lower, I may look to go long on natural gas. But at this point in time, it's still a no touch, but it is shaping up to get very, very interesting. Let's take a look at Bitcoin, BTC, USD. So Bitcoin, again, still chopping in the sideways range. Basically, you have not broken out of this trend line. Now, this is going to be the period where Bitcoin needs to make a run. This is a key trend line that you need to break out and confirm above. If you break out and confirm above that, you'll have some small resistance at 20,300, give or take. And then your big resistance is around this upsloping channel over here, which would most likely coincide with these pivot tops over here around 24 to 25,000. So again, Bitcoin has really been stuck in a range despite the markets going up and floating up positively. Bitcoin hasn't really made its move yet, which is kind of surprising in my opinion. But the one thing is that the asset classes like the stock market, they have experienced high rates like this, but whereas Bitcoin has never experienced interest rates this high. So perhaps that's the liquidity strain that's being the chokehold on Bitcoin, as well as the US dollar surging high. You have to keep in mind, Bitcoin is still a very, very new asset. It's basically it's a teenager, so it's going to have mood swings, wild swings, but it really has never been tested under these financial conditions. So when you have high interest rates, a soaring dollar, those are two major headwinds as to why Bitcoin hasn't broken down. But the longer it consolidates here, and basically this pattern is very bearish. You're making an inside bar. You see this massive wide range weekly red bar. You're technically inside of this. This is resistance. So as long as you're consolidating inside of this bar, this is a bear flag pattern that is just waiting on a knife's edge to break down lower. I just want to touch base on a couple other things. ISRG reported, so Intuitive Surgical. We have played this stock a couple times before on the long and the short side, but essentially I issued a short here for 210 and change. One of the reasons why is there's a massive technical gap fill over here. It also is just a pierce of the daily 50 moving average. Now there is the potential that you could go a little bit higher to this gap fill at 222, but I have no problem accumulating a short on this name. It is a pretty quality company at this point in time, but it has had a pretty big run up from the lows here. You're talking about a 16% run up in as little as 3 days. So that's certainly a pretty big move for a multi-billion dollar company. I think they're about 50 billion. Without any type of pullback or consolidation. So you can see that we're heading into some resistance here. We have this beautiful downsloping channel, which we actually played up here. We played a little bit up here. So resistance is coming and approaching very, very quickly. But again, these markets are likely going to have a positive day tomorrow just on the back of Netflix, unless something changes in the after hours with Netflix forward guidance. But you never know. Anything could take these markets down. It's pretty much very fragile out there, and if markets continue to rally into that November Fed meeting, you can be very, very confident that the Fed is going to get aggressive. And if markets rally tremendously even before the Fed meeting, you're probably going to get a lot of jaw-boning actions from the likes of Mester and a bunch of the Fed officials that are set to speak. I don't know if we have anyone this week. I think there might be someone at the end of the week. But again, there's also jobs data coming out as well, and housing data. So again, things can change very quickly. Just because earnings of a companies are positive does not mean that it can negate the overall macro trend of the Fed tackling inflation. And that's what we have to keep in mind, is that the Fed has their two mandates. They monitor employment, which is at extreme lows, record lows, and then they monitor inflation, which is pretty much at extreme highs. So again, their main focus is not to have asset prices going up. They're going to do everything in their power to still combat inflation. And basically they have expressed to us that they're going to target the housing market, and they're also going to have implications on the labor market, i.e. the employment rate is going to decrease and therefore unemployment will increase. So we're far off from that level of unemployment increasing, but there's certainly companies announcing layoffs left, right, and center, and you'll be surprised at how fast unemployment can start to shake things up. And tomorrow is the anniversary of the 1989 stock market crash. So let's just, a 35-year anniversary, I believe. So let's just be aware of that. Also a major decline in 2008. Obviously, I'm not expressing that we're going to crash, but we just got to be mindful that there's some key historical dates coming up. Let's just take a look to see if there's anything else I can mention. Netflix, do a final check. It is pulling off slightly in the after hours. We did touch base on gold. Let's take a look at the Dow. So Dow Jones Industrial Transportation is a good one to look at. Basically, the key level that I'm looking for in the Dow, let me flip to the daily chart. So the Dow has this COVID bottom over here, and you have a key trend line that I'm watching out for. And this trend line is going to be an epic level to watch for, because if you get a retrace back to this trend line, that is going to be a pivotal area to short. You can see that there's also a big technical gap fill over here. And one could even say that you could draw the trend line like this, where it connects to this major pivot. And then you could have an intersection by October 27th with this gap fill and this upsloping trend line. And that should be a big level of resistance for the Dow. The Dow is a pretty big barometer of the economy. We are in a massive downtrend, so let's not get too cowboy with this market, because certainly things can change on a dime, even if earnings are strong. I do think that we're probably going to see a big company, disappoint. That's generally how things are shaping up. I don't know which company it's going to be, but again, we have a lot of earnings. Earnings just began, so the volatility is certainly going to be present in this market. That's it for today's video. Please give this video a big like and comment down below, and stay tuned for more price action. Again,